Hello. This week's topic is taxing and spending policy, so please read Chapter 13 in the book before you attempt the written question. But I just wanted to talk a little bit about this topic. So here we're talking about essentially how the state governments establish priorities for bringing in revenues, which we usually think of as taxes, but it could be other sources. There are other sources of revenue that state governments have, as well as local governments. And then there's spending. That's the money that the governments are sending out. They could be spending it on policies, programs, or it could be in the form of aid to people. But in terms of tax policy, in the reading you'll read about the criteria for evaluating taxes. So please make sure you understand that. They talk about things like progressive taxes versus regressive taxes, and elasticity in taxes and things like that. Just with regard to the progressive versus regressive issue, I wanted to kind of talk about the difference between that. So a progressive tax is one where the rate goes up as your income goes up. At the federal level, our income taxes are progressive. We have tax brackets at the federal level. So as you cross into a higher income level, you will move into a different tax bracket at a higher rate. Now, some states have progressive taxes. Michigan does not. We do not have a progressive income tax. Our income tax is a flat rate. It's about 4.3% on income. So whether you make $1 million a year or you make $25,000 a year, you're paying a flat 4.3% rate on your income. Now, of course, obviously, if you're a millionaire, 4.3% of $1 million is that amount is going to be more than 4.3% of $25,000. But a flat rate is not considered to be progressive because you're not paying a higher rate as you go up. And certainly, a millionaire, 4.3% of a millionaire's income is almost nothing to them, whereas 4.3% of somebody making $25,000 a year is probably a decent chunk of money that they're paying out to the state. So we would say that a flat rate, like we have in Michigan, is regressive, meaning that it has a regressive element to it in any event, because it really has a bigger impact on people who are making less money than people who are making more money. Sales taxes are considered to be regressive. We have a 6% sales tax in Michigan. So when you go into a store to buy, say, a package of batteries, let's say, or a container of laundry detergent, you pay a 6% tax on that, sales tax on those materials, on those things you're buying. But that's going to impact you more if you make less money than if you make more money. Obviously, again, somebody who's wealthy, who's going to purchase a package of batteries in the store, that 6% tax is practically nothing to the wealthier person. They're paying that amount, whereas somebody who makes less money, it's taking a bigger bite out of their income. And so the idea is that a sales tax, because everyone who buys that product is paying the exact same amount, is definitely regressive. It is going to impact people with less income more than it impacts people with more income. And there's really no way to get out of paying a sales tax. There are some taxes where if you're making less money, if you're making a very small amount of money, you don't pay at all on the income tax. But with sales tax, we all have to pay it regardless of income, so that's regressive. So make sure you understand the difference between progressive and regressive. Again, there's an argument that progressive taxes are fairer because as your income is going up, you're paying a little bit more. And the idea of taxes is really to fund the services and the roads and our education system and other things that state and local government do. And that benefits all of us, even if we're not directly using the service or we don't have kids in the school, we still benefit from having an educated society and having good roads and having good bridges and public services. And so we need to find a way to pay for that. And the argument would be that with the progressive tax, income tax, for example, more people are paying their fair share to ensure that we have the vital services we need. But others would argue that the flat tax is fair because why would somebody who makes more money have to pay a higher rate than somebody who pays less money. So there are arguments back and forth about it, but the book does discuss, the authors do discuss progressive versus regressive. So I wanted to highlight those issues. There's also discussion in the book of other forms of taxation, different ways in which we're taxed. So I've already talked about the income tax. That's the tax on income. Not all states have an income tax. There are states that do not. And those states tend to rely more heavily on the sales tax. But as I said earlier, the sales tax is definitely the most regressive of the taxes because it impacts lower income people far more than it does wealthier people. But there are states that rely on that as their prime source of revenue. There are states that have severance taxes. Alaska, which has a lot of natural resources, has a severance tax where the vendors who are taking oil out of Alaska and selling it across the country pay a large tax to the state of Alaska, and they make a lot of money off that severance tax. But for a state to have such a tax, they need to have natural resources that can be taken out, and that is not something we would have in Michigan. There's always this debate about our water, whether it should be sent to other states, but in any event, that we don't really have oil the way Alaska does. You also have property taxes. Those are the taxes you pay on a home that you own. And again, those taxes are not particularly progressive because they don't, again, progressive taxes are tied to your income. So as your income goes up, you pay a higher percentage, whereas your property tax is going to be the same regardless of your income. But it is an important source of revenue for local communities and for the state. But it's particularly important to local communities. The property taxes pay for your trash pickup if your city has that. They pay for other municipal services. And then you have special millages in some communities that will help to pay for additional education related services. If you live in Dearborn, for example, you have a special millage on your property that helps to fund Henry Ford College, which is why people who live in the district pay less than people who live out of the district, because people who live in the district are already paying for part of the funding for the college through their property taxes. So you have property taxes. Again, every homeowner has to pay some form of property tax, and it's based on the value of your home. You also have what are called sin taxes sometimes. Those are taxes on things like cigarettes and alcohol and so forth, and tobacco products. You also, in states that have legalized marijuana for recreational purposes, you also have taxes on marijuana. Now in Michigan we have medical marijuana, we do not have recreational marijuana. But in states that have recreational, they're starting to make a fair amount of money off the sale of marijuana, and that's an argument that some people make in favor of legalizing marijuana because it would generate revenue. Now, to be honest, it's not going to solve any state's budget problems, although it does bring in revenue. If a state were to legalize marijuana, that's not going to resolve any budget problems they have, but it certainly would help. But of course, there are the arguments that it's an addictive substance, and so there are arguments against it for sure. That would also apply to gambling. We have casinos here in Michigan, and those casinos pay taxes to the state of Michigan, and those taxes are used for education in our state. And that gets into the issue of other things like the lottery. People say, well, I thought the lottery money was supposed to fund schools. Why are schools always in trouble financially? Well, keep in mind that the lottery money is only a small part of the money of the revenues that schools take in the state of Michigan. Most of the revenues for schools come from the sales tax. Our 6% sales tax, which was instituted back in the 1990s, a large chunk of that goes to schools, to the school aid fund. And while the lottery revenue, after the prizes are paid out, the bulk of the lottery revenue does go to schools, it's only a small percentage of the revenue stream for schools. Certainly, if we got rid of the lottery, that would hurt the revenue stream for schools. But again, it's not an issue where the lottery is the major source of money for schools. So that's just a little bit of perspective on that issue. People always wonder, if we're selling so many lottery tickets, why aren't the schools doing better? Well, it's not the major source of their funding. And of course, when we went through a major recession, a few years ago, that hurt schools because people in a recession are not buying things, and if they're not buying things, they're not paying sales taxes, and the sales taxes are what fund the schools. So that's just a little perspective on that. The authors talk about other sources of revenue. You have special fees. For example, you pay fees for parks, state parks. You have fees when you buy your license plates or you renew your tabs each year. So there are a lot of different fees and so forth that we pay, and that's another source of revenue. And then, of course, governments have to make decisions about how they're going to spend that money. And last thing I want to mention is that under most state laws, most state constitutions, including Michigan, the state budget must be balanced every year, meaning in any year, the state cannot spend more than it's taking in revenue. And if that happens, if it looks as if the state is going to be spending more than it's taking in revenue, then the leaders of the state, the legislature, and the governor have to make decisions about how to balance the budget. Usually that means cutting spending for programs, but it could also mean looking at the revenue side and figuring out a way to increase the revenue. But that's always a very politically challenging task. So in any event, that is a requirement. At the federal level, federal budgets are not required to be balanced, but state budgets typically are. So in any event, that's some information on taxing and spending. If you have any questions, please email me. And please do make sure you read Chapter 13 and make sure you understand the different issues, especially those that I didn't talk about in the video. All right, have a great week.